Okay, so now we're going to talk about the volume weighted average price, which is called the Vwap for short. Now, the Vwap is very important because, like the moving averages and the trend lines, they also signify resistances and support levels. Now, if we'll just zoom in on this day here, right now we're on Tesla on 1 minute candlesticks, we can see here that we've got these three lines. We got the middle VWAP, the top VWAP, and the bottom VWAP. Now, as you can see here, the price action touched the bottom VWAP and then went back up, broke past the middle one, and then came up to the top VWAP, and it got rejected. Now, you can use these three lines to base whether or not you want to enter a trade. And the VWAP is only used for intraday trades. You can't really use the VWAP for trading, like swing trading. It's just intraday. So if you're interested in day trading, if you've got the time to day trade, then you would want to use the VWAP because it'll really help you out with figuring out supports and resistances. But for example here, let me see here. Let's go to a time frame. We'll go back to the one that we read earlier. Your 15-day, 1 minute time frame. Just load it all up. Okay. Let's just try to find some good examples here. Okay, so here for example, this day. Right out the gates, it went down. It was pretty bearish. Then it consolidated a little bit, hit the bottom. And remember, if it hits the bottom VWAP, it doesn't mean that that's the bottom. Now it won't go any lower. Because you can see up here, it hits the VWAP, it hits the VWAP, it keeps pushing, pulls back, goes up, and keeps on pushing the VWAP higher and higher and higher. And the VWAP widens and widens. The more volatility there is during the day, the more the VWAP will widen. Like you see, during this time of day right here, it wasn't moving around that much, so it was very close together. But the more movement that was happening here, pushing it up higher and higher, then even the bottom one expanded. So now we have this massive, VWAP of 4% on Tesla, and compared to the VWAP, back here for example, that was only 2%. Now, the middle VWAP, you see here, like everything is support and resistances. So we can really zoom in here. We can see right here that it does hit the bottom VWAP here. And it hits it over here also, but it gets rejected from the middle one. So it goes down, hits the bottom, goes up, breaks through the middle VWAP, and it's a pretty clean break. Broke through, went down. The candlestick is telling us, okay, so we're trying to go bearish, but there's more bulls than bears, so we came back up. Meaning that, okay, so this is, the middle is doing its job as being the resistance. So it goes up here, goes back down a little bit, and then if we move a little bit to the right, after bouncing off of the middle VWAP 3 times, no, more like 2 times, sorry. So it bounces off a couple times, and it comes up, then hits the top one. Now, if you were to trade the VWAP, I would probably say here, even if you got in here, like, even if the volume, there was a lot of volume, a lot of bearish tendencies here, but you could tell right off the bat, when it breaks past the VWAP, you know that it is extremely bearish. So I would probably wait until it stopped trying to break through the bottom, okay? Here we see it kind of reaches the middle, so we got rejected from that level there and came down more, came down. So here, it's not really breaking through the bottom VWAP. So now I think the VWAP is going to be respected. Okay, so I'm going to say, okay, the price action is putting respect on the VWAP, which means that we need to also respect it as a trader. So, see here, it comes down pretty bullish. I mean, it came all the way down here, very long bottom wick, meaning that it tried to be bearish, but the bulls just came in and brought the price all the way back up. Granted, we did go lower here, but the low of this wick wasn't as low as this one. So that's a bullish sign already, even if this was a bearish candle. Now the next one is a very undecisive candlestick. It went up, it went down, ultimately it ended where it opened. But in the next candlestick, we got some bullish, bullish, and then it broke through the middle VWAP. So how you would trade this is, I would probably, if I saw this, if I saw that it went down a lot and there was a bearish, I probably wouldn't be very convinced here. Once I see this candle, I can say, okay, so if it breaks above this point right here, then I'll go ahead and I'll buy in, and I'll put a stop loss at the bottom of this doji candle. So there we go. This undecided candle, put a stop loss on the bottom. So up here, maybe it went up a little bit, went down a little bit, but ultimately it did break through. So this was the confirmation. Now you can buy in if you want to be risky, but normally you would want to wait for the bullish confirmation. So it did go up. Now you also have to be careful, because you need to also expect the trend line. Okay, so if you drew the trend line from the top here, could even be up here if you wanted it. You see, this is why it's not always exact, because there's different ways you can draw the trend line. But you also have to be careful because there's a trend line here. So me as the trader, I would say, okay, I want it to break this trend line. Okay, I want it to break this trend line, go over here. So around this area, if it breaks through and then it at least contests this middle VWAP, then I'm going to be interested in going in long, okay? But I probably wouldn't buy here because it's only it's not really that much margin until it hits the resistance. So I'd probably wait for it to pass the middle resistance because it's a little bit too risky here. So here you see we break through, and then I see this candle telling me, okay, they tried to go down but it went back up. So then I think, okay, so this is being respected as a resistance, so I'm going to go ahead and buy in then. So the next candle, it opens literally right at the VWAP, and it even went lower at one point. But I would say, okay, so if it doesn't go lower than this previous candle, then I'll probably keep it. Either this candle or this candle. And this is the risk of 0.2%, so it's not much at all. But I would probably buy around in this area, and then it came all the way back up. But then when it came down again. Now we can tell that this would have been a resistance because if you looked at the open here, we can already establish that this opening price is also a resistance / support. So if I bought in here, I would probably sell at this level, knowing that this is where we opened. We opened here, it will probably be a resistance. Now let me see where it closed. Usually where it closes, even the day before, acts like resistance. So let's just see if that was the case this time. Yeah, it actually counted as it was actually the support for a pullback. See, there we go. So it's always good to know the previous day close and also the opening of the current day, and those usually act as support / resistances. So since I would already know this, when the price action is in this area, I would say, okay, so my plan here would be, okay, I'll buy in here. If it breaks through or like actually closes underneath this this middle VWAP, then I'll sell. So, and then I'll sell for a loss, but I'll have the sell for profit to be at the opening of the current day. So you see here, buy here, sell here, that's 0.5%. Now with with 10 grand, okay, cool, you made $50, but this can be applied anywhere. So if we can look at the rest of the day here, we see that it did break through the opening, so that this probably got people to buy in because they're like, okay, we just broke the open, but you got to remember there's always that top VWAP right here. So what, 0.4 for a potential of it going down 0.6, not the best entry. You always want to wait for that good entry, and it actually did present itself later on where it came back down. Pretty bullish candle here because it started here, went down all the way, and then it didn't even have a top wick, meaning that it's a really bullish candle if it doesn't even have a top wick. So I would probably even buy in here. And then here there's a lot of consolidation, like a bunch of green candles, a lot of rejection of any kind of bearish tendencies, and then it did end up breaking this support. And so if it breaks a second time, you would want to look at this next level. Is it going to break that level? But you always got to think, okay, we got the previous day's close and the VWAP, so it probably isn't a good time to come in. Probably the best time to enter was after it hit the VWAP and touched the previous day's close. When it gets to this point, then you can say, okay, I think I should probably buy in here. I'll put a stop loss down here, you know, or do a lower low of the previous. So there you go. Put a stop loss there, and then I'll sell once it hits the VWAP again. You know, that's another 0.5%. But once again, this can be used on any chart. You know, this could be a penny stock and with high volume, and this could be 10% move. You know, so just go ahead, open up some charts right now. Open up a chart and just try to do the same thing that I'm doing right now. Okay, try to use the VWAP and then see what good entry points would be. You know, draw some support lines. You know, once again, just go to town, draw all the lines you want, have fun, enjoy yourself. Because at the end of the day, if you're not really having fun with the stock market and drawing these lines to do technical trading and then making money, then probably isn't for you. But yeah, go ahead, open it up, look at the VWAP lines. You know, you can throw in your moving averages also. If it's too much confusion, take them away. But this is basically how you would use the VWAP, just as another set of support and resistances. Once again, it's not always 100%. You know, it hit the top here and then it just kept on pushing the top. So if there's a short seller that makes money when the market goes down and you bought in here, it's like, oh, okay, well, it hit the top, whatever, and then it just keeps on going up. You see, that's a problem. But there you go. Essence of the VWAP, more support resistances. Remember to incorporate this with everything else that you've learned in this course, and then it'll just make you a better trader.